What's up, Tim Sykes, millionaire mentor and trader, here with an amazing video with one of my newest six-figure students. He just graduated college, already made over $100,000. Pretty amazing. He is wise beyond his net worth. He is on the verge of doing some great things. Check this out.
My first big loss happened at the end of my first trading year. I had made 30K. You know, a lot of it was luck, but I was profitable after my first year. And at the end of the year, the market taught me a very valuable lesson. And the 30K that I made my first year, I lost in one day. And so what happened was I saw that oil was dropping. Oil was dropping to $26 a barrel, and I, thought I was smarter than everyone else, and I thought, okay, oil's going to bounce. I mean, oil always bounces. It's not going to go to zero. And so I started looking into the oil stocks, the oil penny stocks, and trying to find an oil stock that has been beat up and look for it to bounce. And I thought I was so smart that I didn't even realize, but I ended up throwing my whole account size into a downtrending oil stock with no real plan, but this is going to bounce, and I just want to be in for the bounce. And I went in way over my head, and this was only my first year of market education, so I really didn't know what was possible. And within 30 minutes, I was looking at a 50% decrease in my total equity in my account. And that was a big lesson for me. And what I learned from that was that I am not an investor. I am a penny stock day trader. And the difference is that when I was in this oil stock, what I realized was I couldn't day trade. All of my buying power was locked up in this oil stock. So if I wanted to, continue to hone my skills day trading for the next day, the next week, the next month, I couldn't be in this oil stock. I had to focus where I was learning and get out of this undisciplined trade, undisciplined trade that was, nothing I've ever been taught in my education from Tim Sykes. And so that was a really hefty price to pay, but I'm glad I learned that lesson early on, that I'm not an investor, and that every day I come to the market to hone my skills as a day trader. And even though oil eventually bounced, and that stock that I lost 50% on ended up bouncing 400%, I'm glad I took that loss, and I'm glad that I was able to learn that lesson very early on in my first year of trading. It's not one that I've ever made that similar mistake since. My second biggest loss happened last week, 3.5 years later. I was in a stock called NBEV. And NBEV, what's really important when you take a loss is to go back and look at the mentality that you had and the psychological factors that influenced you taking that loss. And hopefully, when you do take a loss, that loss is in your control, or at least you can identify areas that you were in the wrong. Hopefully, it is a mistake that is easily not repeated. And for NBEV, fortunately, it is a situation where I was doing things wrong, and there are mistakes that I can learn from. First and foremost, when I like to short stocks, I like stocks to be red on the day. I like momentum to be towards the short seller's side, and I want longs to have a reason to sell their position. When I was shorting NBEV, it was still green on the day, so I was going for a very aggressive short. I was in a home run mentality when NBEV was spiking, and so I was really looking to put in a big portion of my account size and capitalize on this move that seemed, at this point, already ridiculous. But the problem was, the trade wasn't on my side yet. And I was in this home run mentality where I really wanted a big win. And that ended up causing me a really big loss. And the third component to that big loss was that, eventually the stock, I sized in relatively large to the stock, and eventually the stock did break my risk. And as it broke my risk, it halted to the upside, which was, really scary. It halted because it was a volatility halt, and I had no idea where it was going to open up. And so, my risk was $6 thinking back, and it halted right at 6 as it was break. So I didn't have an opportunity to cut the loss as it violated my risk. And when it opened back up at 6.30. That's $6.30. and slammed back down. And so in my head, I said, okay, great. That must be the high of the day. That must be the stuff. That must be my risk. What I didn't account for was that I started this trade with a home run mentality, and I had this relatively large size. In the beginning, my risk was 6 for this relatively large size. And when it reopened and gapped up a little higher than 6 and hit 630, I readjusted my risk to 630, a 5% higher risk with the same position size. And so when it eventually did come back to break that risk, and I did responsibly cut that loss and I was just done with it, it was a relatively very large loss. And arguably, it was a trade that I should have never been in the first place, because it wasn't necessarily in that stage of the pattern that I really think that odds are on my side. It was at a stage of the pattern where, you know, I was being a little too aggressive and fighting the odds and fighting the trend. And I got burned by it. And, it's a double-edged sword. It's bittersweet. It's never fun to take a loss, but it's always a great learning curve on how you can improve and how you can narrow down which stocks you should trade in the future, or when to trade those specific stocks in the future.
Hey, Tim Sykes, millionaire mentor and trader. Thank you for watching my videos. I hope that they help you. I want to share everything that I've learned over the years. You can check out more videos right over there, and also click subscribe so that you can watch all of these videos, get that knowledge, and become my next millionaire student.